Today we're going to be talking about 25 and 50 pip movements from the previous day's highs or lows. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. It's Friday. We've got non-farm payrolls tonight. We've got a couple of Canadian dollar announcements, but we've had some absolutely huge moves this week, not only on the British pound pairs, but on some of the US dollar crosses. Some absolutely textbook trade setups, not only for trend trades, but stop hunts into the trend. We're going to review some of the trades from the week, looking at some of the different scenarios that played out, but we're going to talk about 25 and 50 pip movements from the previous day's highs or lows and how that can give us information going into the next session if we're looking at a potential stop hunt with a trend or a trend trade or a breakout pullback continuation. Just some different scenarios that played out, focusing on our 12 candle window and specifically in that equities hour for certain types of setups, engulfments and pin hammers. And just before I forget, Thursday, August 6th, 7:30 Australian Eastern Standard Time, 1930, I guess, military time. I'll post a link below. I'm going to be a participant in a webinar with a gentleman from Sydney, Peter Anderson, who's another trader who's mainly EA. We're going to be discussing with Chris Weston from Pepperstone different approaches to trading, comparing the two, how we manage our risk, what we look for entry criteria. I'm really looking forward to hearing what Peter has to say. He's been trading for many years, very, very successful. Excited to hear his take on the markets. And also Chris Weston will be looking at some different macro types of indices and different scenarios playing out currently in the global markets. It's going to be a very informative night. I'm going to learn a ton, but I'm also going to be a participant and hope to share my own insights into the markets and what I do when I trade them. Today, just reviewing the 12 candle window, 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m. New York Eastern Standard Time. That's the 3-hour window that I focus on, predominantly in the London and New York sessions. Depending on the scenarios, often we will get trade setups in that Asian window, specifically again the equities hour in the middle. Looking at the high of the day, the low of the day, the timings, 25 and 50 pip movements from the previous day's highs and lows can give us a valuable amount of insight as to whether or not the market may be trapping volume down low for a move up or trapping volume up high for a move down, and whether or not that move is actually a trend trade or a stop hunt or liquidity hunt or whatever people want to call it. But looking at that timings and then the engulfments and pin hammers for myself to enter into the market with a 1 ATR or 1 bar stop, targeting asymmetrical risk reward of that larger geometrical structure for 50 or more pips, depending on how that market trades when price gets to those levels. So we've seen some monster moves this week. I've received a ton of emails. What is your thought process as the markets are heading into that window? And as I said in answering some of the questions and emails, and again, thank you for all the comments and the emails. Again, I got a massive list to get through, and I'm trying to. I've had a pretty busy few days here. So when the market closes and goes into the next day's session, depending on how that closes, if it pulls back or goes into consolidation, often that extreme price level, whether it's at numbers or near numbers, can give us a lot of insight when we start looking at 25 and 50 pip increments away from that extreme price. As the next day's session starts to trade, the market will often maybe move sideways within a 25 pip box, or it may work into a low. Asia paints a high and a low. It may work into one of those extremes, so we use the phrase, is it working the low? Is it setting up as we head into the next window? There's been a couple of scenarios that have traded this week where the market consolidated in the Europe-London window and traders were looking for the buy low setup, but the price action didn't confirm that, and it dropped another 25 pips heading into the US session. So that market consolidated, made a 25 pip stop hunt in a 1, 2, 3 fashion before giving a bullpen hammer and an engulfment in that first hour of the US session window. So again, the most important thing to understand is how does price behave when it gets to these levels at those timings. Now, a lot of people they ask the same question over and over again about the timings. These timings are absolute, and you can go back and look throughout the week. We'll do that today. Almost every day you will see one of those extremes in one of the sessions, whether it's the high of the day, the low of the day. How to recognize when Asia itself may be trading in a manner that identifies that it will be the middle of the range for the day, and other days where we can see a peak formations in place that potentially may be the peak formation for the entire session or the day. So those are important. And coming back to our original premise, 25 and 50 pip movements, and sometimes maybe 75 depending on the nature of that pullback, that can give us a lot of insight how the market trades in that 8 to 12 hour window heading into the Europe-London Open. Coming back to some really simple concepts, the three things that markets do. They break out, they pull back, and they trend. They break out, they pull back and reverse for a false break reversal, or they break out and they pull back and they stay in a range-bound market. When Monday starts to trade and we're in a previous week's trading range, at some point the market will test an extreme of a previous day's high or low, while at the same time, if it's inside, will test its own daily high and low. I always focus at those extremes. Now, people misinterpret that you're trying to sell the high and buy the low. Not at all. Think in simple terms. Often in a lot of cases, as we head into the next day, the market may pull back and be trading in a range where it starts to work one side, and as we get into the next window, the market may have only pulled back 25 to 40 pips. And it may be in our next 12 candle window, as it starts to trade, start to identify our type 3 W formation, or if we're working up, the market may come up in the Europe Open and work the high for a type 2 M formation, or the market may break down to the 25 to 50 pips and give us our type 1 W formation for a reversal. So again, the most important thing to understand is the timings, the nature of the pattern when we get to these price levels. So we're not just blindly buying down somewhere. It's very specific to this 3-hour window, and we talked about this. That first hour will often be the trap and the stop hunt in one, liquidity hunt. Think simple. If this market has moved up 100 pips or 75 pips or 125 pips, I used this analogy the other day. If this was the close of the previous day and we're roughly 25 pips wick above the close, the next day the market opens and we move down 25 to 50 pips in that range, that market now potentially may continue that trend, but we have 50 or more pips potentially from that high to that low, where the market not only does it pull back against profitable traders that have been potentially long or short, depending on how that sets up, that eats into their profits. So the person who's up 100 pips, all of a sudden they're only up 50, 25 to 50. But it also traps traders chasing this move down in Asia, trapping them in, chasing the momentum, that pulsation when the market starts to move. Shifts, traps them in the wrong direction, triggers breakout orders, may trigger profit targets. There may be traders that have shorted the market up top. All these different scenarios. So not only are they trying to trap more volume, potentially, maybe for a squeeze, trapping traders in the wrong direction before they shift the market, but they're also eating into profitable trades, 25, 50, maybe 75 pips from the extreme before resuming the original direction or trend that they want to move in. And that's all dependent on, number one, the timings, and also how price behaves at those levels. We're going to look at a couple of different examples of where markets broke out and continued to trend out of a larger geometrical structure from the previous session's high and their low. But also we'll look at markets that traded back into the trend in this similar fashion for a reversal out of a larger geometrical structure, where Asia was actually, the way that it traded, identified that it was potentially the middle of the day, or the middle of what was going to be. So London made a low, New York ended up being the high. And then also a pair where the way that the Asian session traded identified it as the potential peak formation low of the day, and for the entire session as well, and the day itself. So timings, the high and the low, and just remember, coming back to some simple concepts, the market may be triggering technicals, but what it may be doing is going back against profitable trades and then creating a low of the day before moving through a larger geometrical structure for a measured move. Sorry about the mess, but think of the market dragging traders in one direction, putting a low in place, locking that in, and then moving aggressively away from trap volume that's caught in the wrong direction, and then using that geometrical shape as a measured move, similar to what we just talked about, for 25, 50 pips, but to continue that trend for a geometry of maybe 50, 175, 125, whatever that may be, in the opposite direction of the true trend that they wanted to take it in. So we'll look at some examples. Again, thank you for all the great feedback, a ton of questions, but think about 25 and 50 pip increments. If the market heads into the next session and it's jamming into a level and not going anywhere, we may be potentially looking at a squeeze. If the market breaks out and we've got peak formations already in place, we may be looking at a breakout pullback of a larger geometrical range for a continuation move. And we may also be looking at a market that goes into consolidation, drops another 25 pips at the timings, engulfment pin hammer in that equities hour, another pin for the reversal back up with the true trend. Keep it simple, traders. Some data coming out tonight. It's been a huge week. We're in some big trends. We may see these trends continue. There's a lot of other global macro factors kicking into play. So I look for some simple setups that are going to show up the same every day. And one of the ways that I can do that is simple system, but also looking at 25, 50 pip increment levels and how the market behaves around those levels and the timings to identify my key entry points, having a 1-bar stop, asymmetrical risk reward. Plug and play, walk away, let the market do what it's going to do, control your risk, lock in your profits, keep it simple. Have a great weekend, keep it simple, end on a strong note, keep the questions coming. Thank you for hitting the like button, and may the markets go with you.
Good day, traders. Just a reminder, next Thursday, August 6th, 7:30 Australian Eastern Standard Time, 19:30, GM military time, 9:30 GMT. Myself and Peter Anderson will join Chris Weston from Pepperstone. We'll be discussing our two different strategies, covering mistakes, I suppose, that all professional traders, I know I can talk a lot about my own personal mistakes, how we define our strategies in terms of risk, the levels, sizing, why risk is at the core of everything that I do. And I know I'm looking forward to hearing Peter talk. He's a very experienced trader, very successful. It's going to be a fantastic night. Chris will be covering a lot of macro market cycles in terms of the global markets. Traders who are interested, they'll also have an opportunity to benefit from one of the offers that Pepperstone has on. And there's a link below for traders who are interested for them to sign up for the webinar. It's going to be a great night. You definitely don't want to miss this. Peter Anderson is a very experienced trader, and hopefully together we're going to share a lot of information that will help traders just continue on their own trading journey. So again, that link is below. Make sure you save your spot. You don't want to miss this. I'll be reminding everybody up until Thursday, but definitely save your spot and look forward to seeing you there. Good day, traders. Stacey Burke from Stacey Burke Trading. Continue our discussion on looking at 25 and 50 pip pullbacks from previous days' highs and lows, but also we're going to review the entire week on the pairs and looking at each day, the geometry, the structure, the timings, and the pattern. So we talk about the initial balance. We head into this week on the pound Aussie. We had the previous week's high. We have the previous breakout from the W formation, the previous week's low. We head into Monday, and the market will blow this up a bit. The market trades in Asia in a 25 pip box, but we talked about identifying, the previous high of the day and counting back and thinking about a profitable trade that's already in place in the market, pulling back 25 pip consolidation. It drops down below the double zeros and then drops down to the next 25 pip increment. But at the timings, in our first hour, we talked about the trap and the stop hunt. The market goes through the second 25 pip pullback. So now we're almost 75 pips from the previous session's high before going 1, 2, 3 at the second candle of the London hour. Okay, so we talked about again that equities hour, 1, 2, 3. We're 100 pips now below the previous day's high. But we have a 1, 2, 3, which is a 50 pip stop hunt into the previous Friday's existing long trade, which was long off a peak formation low. So again, we talk about thinking simple. Where is the money? They're eating into profitable trades. This is a stop hunt pullback. This triggers all the technicals, dragging traders, chasing the move down. And again, this is a tradable situation. But the timings, pin hammer engulfment for the reversal in the equities hour is the golden setup for the trade in the other direction. So you could certainly have been short. The market then comes back to not only the high of the day, but the high of the previous day, which hits stops on traders that are short. It triggers breakout traders before pulling back. The trade down, the stop hunt down, eats into profitable trades, eating up profit in traders who have not taken any money off the table, before then pulling back into consolidation, 25, 50, and almost 75 pips, which becomes 75 into the next day's session. We had news on this particular day on the Aussie dollar, but again, another 25 pip move in the equities hour, 1, 2, inside bar, 3. This is called working the low, but it also goes back to get traders who are in the money from the previous London session reversal. The market hits the low before engulfing at the low at the end of the 3-hour 12 candle Asian window, working its way back up, now 25 and 50 pips, and then 75 into the Europe Open before going into consolidation. So again, every time the market moves 25 to 50 pips or more at the timings, it could be setting itself up. Now we go into this London window and traders are looking for the trade, or they're long and the market doesn't follow through. When you get this sort of consolidation, you have to be thinking this is potentially then the middle. This is the middle of a move. There's no peak formation in place. It's a consolidation. The market comes back and starts working the low before going 1, 2, 3 in the U.S. session equities hour. Very similar scenario to the Monday London low. We get a 1, 2, 3, which is a 25 to 50 pip stop hunt against traders who are long in that Asian second 3-hour window, before reversing and giving a second pin hammer for a 50 pip move to the high of the day. So again, the green line represented the previous week's high. We've already triggered that and pulled back. They've worked back down inside of the peak formation low from the previous day, went up into consolidation and worked down into the peak formation low from Asia, worked back into it again in the U.S. session. So timings are critical. Timing is everything. The market then moves up 75 pips and goes into consolidation. So we talked about 50 pip movements from a previous day's high or low, 25 to 50 pips. So again, the market pulled back 75 pips and went into consolidation, dropped another 25 before giving a peak formation low. So there was no price behavior prior to that, but we're talking about the 12 candle windows. We go into the next day, we pull back into consolidation, 25, and then 25 more. The market reverses in that equities hour and gives us a peak formation low, but then pulls back and trades beside that in consolidation, working the low, taking out the low of the day, but not trading through it. So we'll just mark that off. Oops. We have a low of the day. The market is working into the low without breaking through it. Working the low, pulling back, working into the low in the 3-hour Europe-London 12 candle window before breaking above that. So Europe breaks north, not down, breaks up and pulls back, goes sideways, engulfs the right side structure, and continues to move in the original direction. So again, 25 to 50 pips. The market is actually almost 75, but it's jamming into the low, jamming into the low, jamming into the low. And we talked about trap volume. Where is all the volume trapped here? It's trapped down low. Working the low, working the low, working the low before breaking back above it and shifting away. Trap the volume, move away. Market pulls back in the U.S. session before breaking higher again. Making new highs. We're above now the previous week's high. So just coming back to our structure, if we were talking about a measured move, this market potentially now has broken out of the previous week's high-low, and it's conceivable that this market potentially could do a measured move of that previous week's high-low. So we'll mark that level off at 84.40 roughly. And we'll go back to our consolidation. We'll bump this apart a bit. We move into the next day, and we're looking at 25 to 50 pips from the previous day's high. The market pulls back and goes into consolidation. Just over 25 pips, it hits the low of the U.S. session before pulling back and going sideways in a 25 pip box. The market stays sideways and eventually in that second 3-hour window breaks out and goes higher before pulling back and giving a pin hammer at the first candle of the Europe-London 12 candle window. Breakout, consolidation, continuation, and now we're talking not only structure, we've got a breakout of the previous week's high, but we have a geometrical structure for a high and low movement for this market to potentially trend trade in if it was to continue to move. We have a pin hammer at the beginning of the Europe-London 12 candle window. The market breaks above the second full expansion and continues to trade up to the higher second full 100% expansion. And again, we had 84.40 as a full expansion of the previous week. We'll remove that. Before the market pulled back in the U.S. session at the end of the 12 candle window, 100 pips. More than 100 pips. We've since gone into consolidation. The market has given us a low of the day. It broke out in the second or the end of the 3-hour window to give us a peak formation high before auctioning down and going into consolidation at the low of the Asian 12 candle window. So this market may work back into the low. We're at double zeros. We could see a retest back up towards the high of sellers that are short. But most importantly, obviously this market's come back more than 25 to 50 pips, but on the day itself, we've now just had a 50 pip stop hunt to the low of the day, and the market now is going sideways into consolidation. Great example yesterday. Similar, we can talk about the pound yen breaking out of the previous week's high yesterday. but also just in terms of geometry and structure. We had a breakout of the Monday, Tuesday trading range. We talked about initial balance. The market broke out, pulled back, and continued the move. But yesterday is a great example on the pound yen of a 50 pip stop hunt in the timings in the second candle of the equities hour. So again, identifying trap volume. The market trapped all the volume in the upper part of this 25 pip box. The volume was all trapped up top before, boom, hitting all the stops, not only from the Asian session, but from the previous US session lows. Before engulfing, 1, 2, 3 engulfment, pin hammer, equities hour for the move back up to the high of the day, the consolidation, and the continuation. Similar, we see the market has pulled back, gone into consolidation before trading back up towards the high again, and we now have had 25 plus pips come down in Asia. The market has almost moved 50 pips from the high. It's hit the low a second time. We may get a third hit to the low for a low of the day trade set up back towards the high of the day. But again, in this next hour, how price behaves will dictate if the market heads up to work the high or if we'll work the low one more time heading into that London equities hour for a move back up. But again, most importantly, just talking about 25 and 50 pip increments. This market moved up 50 pips before moving down 50 pips for the reversal. Pound New Zealand yesterday. Again, you can go back and check your own charts for the geometry for the break of the previous day's highs and lows, weekly highs and lows. In the second 3-hour window yesterday, the Pound New Zealand broke out. It had given us a peak formation low in that equities hour of Asia. 1, 2, 3 engulfment, sideways, pin hammer for the continuation, breakout, pullback, breakout, pullback, consolidation, pin hammer, 2-bar engulfment in the beginning of the Europe-London hour. And we also now have a rectangle that the market has broken out of. We've broken out of a daily high. We have structure. We have a measured move potentially happening if this market was to trend. The market does 2 full expansions plus before engulfing, going sideways and dropping down in the US session, and then moving 100 pips from the beginning of the session this morning before having a 50 plus 75 pip stop hunt back towards the low of the day. So every time this market moves 25 to 50 pips, pay attention to how that market behaves in terms of its price action. But most importantly, when there are highs and lows in place, profitable trades in place. This was a short trade from the previous night. The market has pulled back 100 pips, stopping out traders who were short from up top. Now we have traders that are long. We could see this market come back towards the low of the day, targeting traders who may be short somewhere in this Asian window. 25 to 50 pip increments, traders. Every time the market moves, heading into those timings can be very critical as to whether or not we're looking at a stop hunt, a trend trade, or a false break reversal. So hopefully you got some value from today's video, traders. Keep it simple, stay disciplined, end the week on a strong note. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.